Mortgage rates are on the rise this year. How will that affect your ability to purchase a home in the coming months? Let's get into that right now. Hey everyone, my name is Venus, your favorite Metro Denver realtor, and while it's important where you live, it is even more important where you do life. So if this is your first time to my channel and you want to know all about where to do life in Denver, Colorado, then make sure you tap that subscribe button and click that bell so you are notified each and every time we do a new video. You can also reach me direct at the number below for all of your real estate needs. We get calls, texts, and emails all the time from our viewers looking to move or relocate within the Denver metro area, so please don't hesitate to reach out however it is you want to. We are here for you. So, are you thinking of buying a home in the coming months and you're worried that the mortgage rates are going to go up before you're able to secure a home? Are you wondering what the rates will do to your ability to purchase? Keep in mind, though, that rates are still very low compared to the historic average. However, anytime a rate goes up, it does affect your ability to purchase and how much you can borrow when you're buying a home with a loan. Since January, mortgage rates have increased to 0.5%. So when buying a home, it's important to know you're not buying a mortgage rate, but you're really buying a monthly payment. It's important to determine what your monthly budget is so that you're comfortable with that, so you can plan and adjust accordingly. A small increase in the mortgage rate can make a big difference. According to the National Association of Realtors, in considering a purchase price, this graph shows what the monthly mortgage payment will do to an increase of interest rates. Just 1% changes your available purchase price by $30,000, and this is on a $313,000 purchase price. We're currently selling an average in the metro area about $500,000, so this could be much more drastic. But if you look at $300,000 at 2.75% interest rate, the payment is projected to be $1,225. But if the rate goes up to 3.75, that new payment is $1,389. That's a difference of $164 a month. And now if you want the same payment, you can now purchase a home at $270,000 if that rate goes up to 3.75. That's a big gap, especially with home prices going up as well. So with home prices and interest rates starting to creep up, let's say hypothetically the equity gain is 10% in this home. So the $270,000 home was $250,000. And now if the market sees an increase of 1% mortgage rate and equity 10%, you're $50,000 away from the home that you could buy today. The average 30-year fixed rate mortgage hit a low in 2020 and are expected to remain somewhat low through 2021, but they're inching up. Some experts are saying that the rates may drop under 2% again, but expect to land somewhere in the mid-3s by the end of 2022. Freddie Mac, which is a government-owned corporation that buys mortgages and packages them into a mortgage-backed security, and whose official title is Federal Home Loan Mortgage Corporation, has projected low rates but see it inching up through 2022. As you can see on this graph, however, even if they do go up, they are still a historical rate since 2016. They aren't the only authority to forecast the continual low rates, with raising through 2022. Looking in this graph of Fannie Mae, which is another government-backed loan program, as well as the Mortgage Bankers Association and the National Association of Realtors, they all agree with small minor differences. Looking at this projection sheet, they break down it quarterly and state that the average of all four of these predictions show lower than the anticipated original mid-year increase to 3.5%. It is important to know, though, that while a small change in interest rate can seem inconsequential, it can make a substantial impact on monthly mortgage payments, especially getting into that $400,000 to $600,000 range that we're seeing most of the homes selling at in Denver area this year. What does that truly mean for buyers? Well, low mortgage rates are creating an outstanding opportunity for current home buyers to get more money while they're staying within their budget. As the economy gets stronger and we recover from the challenges of 2020, it is natural for rates to potentially rise in response to a healthier economy. Mark Fleming, our chief economist at First American, reminds us that rising interest rates reduce house buying power and affordability, but are often a sign of strong economy, which increases home buyer demand. But by historic standard, today's mortgage rates remain historically low and will continue to boost house buying power and keep purchase demand robust. With low rates fueling activity among hopeful buyers, there are a lot of people who are highly motivated and looking at homes to purchase right now. In this environment, it can be very challenging to find a home, but it should not stop you from stepping into the ring with a qualified realtor that will help guide you through this new housing market we're in. If you're ready to buy a home or even sell a home, it may be wise to move now before the interest rates begin to rise. Why, if you're selling a home? Well, it reduces the buyer pool for your home greatly as well, with rising values and increasing rates. I've been an agent for 20 years, and I've never thought it was a better time to buy or sell a home. Reach out to the team at the information below to get the conversation started, and keep an eye out for any upcoming videos, and don't forget to subscribe. Until then, see you next time.